Hey everyone! So let's talk about something that I think almost everyone in crypto is getting completely wrong. When we look at crypto success, what's the first thing we check? Price action, right? Bitcoin hits new all-time highs, altcoins are pumping, and boom, crypto must be crushing it. But here's the thing. I think this perspective is missing the bigger picture entirely. See, here's where it gets interesting. Crypto isn't stocks. With stocks, it's pretty straightforward. If a company's financials look solid, revenue's growing, and their product is flying off the shelves, then yeah, the stock price usually follows. Makes perfect sense. But everyone's applying that same logic to crypto, and that's where things get messy. People are scratching their heads saying, wait, all this amazing news is dropping. Why isn't the price exploding? And here's the reality check. We're still heavily tied to Bitcoin's movements. We're still riding the waves of hype and speculation. But, and this is huge, that's actually changing right before our eyes. I'm seeing this shift happening everywhere. Major players, even the CFTC, are moving us from this wild speculation game into something much more mature and serious. And what the CFTC just announced? It's absolutely massive for crypto. We'll dive into that in just a minute. But first, let me quickly touch on XRP and what's happening in the markets right now. Earlier today, I was breaking down HBAR and Bitcoin. And honestly, if you're looking at the 24-hour or even weekly charts, things might look a bit rough. I get it. But here's what caught my attention. When I zoomed into the 4-hour view on XRP, we're actually trading in a nice uptrend. Now, could XRP retest this trend line? Absolutely. We're looking at around $2.03 or so for that retest. We might even see a quick wick below it, just like what happened on the 21st. The good news? We're maintaining higher lows right now, which I absolutely love to see. What I'm really watching for is that next higher high. That's when we'll have some solid bullish structure locked in. And here's where that mindset shift comes in again. When XRP sells off or the price action looks shaky, the immediate reaction is XRP is trash. It's failing. It's not doing anything. But guys, this is such a limiting way to measure success in this space. Why? Because we haven't even hit the utilization phase of crypto yet. We're still building the highway that's going to take us there. So let me walk you through some major developments that are happening right now around legislation, because the market is actually looking pretty solid. I think we're starting to see that bounce back momentum building. Obviously, we still need to keep an eye on those lower timeframe structures. We need those higher highs to really confirm we're flipping bullish. But December is starting off on a pretty promising note. I think we're in recovery mode, and with liquidity starting to improve, that's only going to help our cause. Now, here's the big one, the legislative developments. On December 3rd, Eleanor Tourette dropped some important intel. At a crypto-themed Christmas bash on Tuesday, Tim Scott floated 2 potential dates for when the banking GOP might move forward with their market structure markup. He also shared where things stand with the votes. Here's the reality check though. It's looking like we won't see market structure legislation in 2025. It feels like this is getting pushed into 2026, especially with the holidays and vacation schedules coming up. But wait, there's actually a realistic path forward that could surprise everyone. We could potentially see a markup happen on December 17th or 18th in committee. And here's the kicker. We might actually have the votes to get it done. The numbers are looking pretty solid. We've got 13 Republican votes locked in, plus 2 or 3 Democrats who are already saying they're on board. Perfect timing too, since this would get marked up right before everyone heads out for the holidays on the 18th. So here's what I'm thinking. Going into 2026, we could actually see this thing fully addressed and signed into law. Clarity could become reality in the first quarter of 2026, which, honestly, was always my timeline anyway. With all the shutdown drama and delays we've seen, I figured we were heading into 2026 regardless. But this is definitely something major to keep on our radar. Now, speaking of clarity, let's talk about the big players in the regulatory game, the SEC and our new chair, Paul Atkins. This is where things get really interesting. Back in September, Paul Atkins dropped some huge insights about something we've all been waiting for: harmonization between the CFTC and the SEC. Basically, these two powerhouse agencies finally working together on crypto legislation and regulatory moves. And guys, this has been a long time coming. Ever since the SEC lawsuit with Ripple started, I've been saying that the SEC won't be running this show alone forever. We're going to see the CFTC and SEC team up, and honestly, that's exactly what everyone in the space has been asking for. CEOs from major crypto companies have been practically begging for these two agencies to collaborate on proper legislation. And you know what? It's finally happening. Remember this summer when the CFTC said they were actively seeking input from major CEOs in the space? They wanted real guidelines from the people actually building in this industry. That's how you create smart regulation, by listening to the innovators and making sure nothing gets unnecessarily held up. This approach keeps innovation thriving while creating a regulated environment that's actually efficient. It's a win-win situation. Well, guess what? We're starting to see that big regulatory shift happen in real time. The CFTC is absolutely central to this, but so is the SEC under new leadership. On December 2nd, Paul Atkins dropped a bombshell. He said the agency has enough authority right now to advance crypto regulation without waiting around for Congress. And get this, they're planning to unveil an innovation exemption for digital asset projects within the next month. This is absolutely massive, guys. It shows that the SEC is genuinely committed to helping crypto thrive, not holding it back. But it gets even better. Paul Atkins just went on Fox Business and said something that gave me chills. He said, "Tokenization isn't coming, it's here." Think about that for a second. The SEC chair just went on national television and called tokenization the way the world will be. Not in 10 years, not in 5 years, maybe in just a couple of years. After years of the SEC seemingly standing in the way of innovation, we now have leadership saying regulators need to embrace this technology to keep the US at the forefront of global markets. The quiet part was just said out loud, folks. The modernization of markets isn't optional. It's key to survival. Big shout out to Cryptos R Us for highlighting this perfectly.
Do you expect this is where financial services is going? Are the major banks and the brokers out there today moving increasingly toward tokenization?
Oh, absolutely. And it's the way the world will be, here in the, maybe not even in 10 years, maybe even a lot less time, maybe a couple of years from now. So I think that all of this modernization of the markets, I think, is good. And the trouble that we've seen here over the past few years is that the SEC, unlike historically, it never was necessarily at the vanguard of pushing new innovations. It was always a little bit behind the market, of course. But here recently, it's been almost standing athwart the marketplace, and as it's as all these new innovations were coming about. So that's no more. We're actually embracing it, and I believe that we need to be embracing it to keep the United States at the forefront.
And listen, tokenization isn't just some regulatory talking point anymore. It's become a massive focus for literally every regulator and every traditional finance giant out there. I'm talking about the big names: Citi, Bank of America, JP Morgan. Even powerhouse organizations like the DTCC, the IMF, and SWIFT are all deep in tokenization conversations. Why? Because they can see the writing on the wall. This is the future, and they don't want to be left behind. Now, Paul Atkins gave us that incredible SEC perspective, but what about the CFTC? Oh man, what they just announced is absolutely game-changing. Get this, CFTC announces first ever listed spot crypto trading on US regulated exchanges. This is the CFTC literally unlocking the door for some of the biggest institutional players to finally enter the crypto space properly. Caroline from the CFTC dropped this bombshell. You can now trade listed spot crypto on CFTC exchanges. We are working smarter and faster to protect Americans who deserve safe US markets, not offshore exchanges. Here's the official announcement that's got everyone talking. Federally regulated spot crypto markets open a new golden age for innovation in America. The CFTC acting chairman announced that listed spot cryptocurrency products will begin trading for the first time ever in US federally regulated markets on CFTC-registered futures exchanges. Now, here's what makes this so powerful. The CFTC has this incredible track record, nearly 100 years of being the gold standard for regulated trading, always balancing innovation with rock-solid customer protections for both institutional and retail traders. And they're giving credit where it's due. Thanks to the current administration's leadership, they've developed this comprehensive, all-of-government plan for America to reclaim its position as the world leader in digital asset markets. The CFTC is playing a central role in making this happen. Here's the reality check that really hits home. Recent events on offshore exchanges have shown us just how essential it is for Americans to have real choice and access to safe, regulated US markets. Now, for the first time ever, spot crypto can trade on CFTC-registered exchanges with the same customer protections and market integrity that Americans have come to expect and deserve. But here's where it gets really interesting. 15 years ago, Congress passed major reforms after the Great Financial Crisis, including this requirement that leveraged retail commodity trading could only happen on futures exchanges. Makes sense, right? But here's the kicker. The CFTC never actually implemented this critical customer protection reform. For years, despite massive market demand, they didn't provide the regulatory clarity needed to list these retail exchange-traded products. Instead, and this is the frustrating part, the CFTC chose regulation by enforcement rather than creating clear rules. The result? Huge fines targeting the crypto industry. But guess what? It didn't actually protect retail traders by giving them a safe place to trade. But everything's changed now. Under current leadership, the CFTC is finally using their existing authority they've had for decades, to work smarter and faster to protect Americans who deserve safe US markets, not offshore exchanges that lack basic safeguards against devastating customer losses. This historic milestone came from months of public engagement, expert input from stakeholders, CFTC staff, and other regulators. The President's Working Group on Digital Assets played a huge role too. Now, here's why this is absolutely revolutionary. Yes, you can already buy Bitcoin ETFs like iBit on regulated exchanges. But here's the thing. The actual Bitcoin inside those ETFs still comes from unregulated crypto markets. This CFTC decision is completely different. For the first time ever, spot crypto itself can trade on fully regulated US exchanges like CME, CBOE, or NASDAQ. Think about what this means. Spot crypto trades are now happening on the exact same regulated venues as S&P futures, oil, gold, and foreign exchange. This opens up massive opportunities. Institutions can now trade actual crypto, not just an ETF wrapper. Banks and pension funds that were legally blocked from participation, they can finally join the party. But here's the real game changer. The underlying market becomes federally regulated. Crypto isn't just getting wrapped around the US financial system anymore. It's getting fully integrated into it. This just unlocked so much capital that was sitting on the sidelines. We're talking about opening the absolute floodgates here. Now, the CFTC has been pretty bullish on crypto for a while, but this announcement, this takes things to a completely different level. And for those who might have missed just how incredibly bullish Caroline D. Pham has been on crypto, you need to listen closely to this clip from September 30th. This will blow your mind. The Nasdaq and CFTC are partnering to modernize oversight of today's fast-moving, complex markets. By adopting Nasdaq's market surveillance platform, the CFTC is strengthening market integrity and staying ahead of emerging risks. Acting Chairman Caroline D. Pham explains how modern technology is helping future-proof regulation in this rapidly changing landscape. Check this out.
It's never been more important for the CFTC to be a 21st century regulator as we tackle innovative new products and markets like crypto assets and prediction markets. We need to have a best-in-class, industry-leading market surveillance system. This is something that I worked on in the private sector. This is something that's so important for the CFTC. So by implementing NASDAQ market surveillance, we are bringing in a fully automated solution that can do cross-market analytics, that can generate dashboards for us to be able to monitor many different markets and products at the same time, and to do transaction level analysis. So what this signals for the CFTC to modernize, to embrace new types of technology like NASDAQ market surveillance and adopt other new technology tools is that we are really going to be a forward-looking regulator that is really trying to future-proof our mission so that we are able to scale and adapt to no matter what new markets or new products are being launched. I really feel that the CFTC is going to be in the best place possible to handle anything new that comes at us.
I mean, guys, just think about this for a second. In the last couple of months, we've literally watched these regulators transform from what many saw as hostile forces into some of the most bullish players in the entire crypto space. Everything has changed. The CFTC just did something that many thought was impossible. And here's the thing, this is just the beginning. Crypto is becoming extremely successful, but not in the way most people are measuring it. It's not about the daily price charts anymore. It's about getting fully embraced by the US financial system. Look, I get it. Everyone's staring at price action. Red candles, green candles, that's how most people decide if a project is successful or not. But I need you to take a step back and really grasp what's happening here. In just a couple of months, we've watched the CFTC and SEC work together to make some of the largest, most significant moves possible for crypto. And guys, we're still just at the starting point. The foundation is being laid for something absolutely massive. While everyone's worried about short-term price movements, the infrastructure for crypto's long-term success is being built right before our eyes. This is the shift from speculation to legitimate, regulated, institutional adoption. This is what real success looks like. So, with that being said, I hope you guys found this breakdown as exciting as I did. If this opened your eyes to what's really happening behind the scenes, smash that like button, hit subscribe, and turn those notifications on so you don't miss any of these game-changing developments.